check on naturally low, see if it's streaming.
Well,
This thing has been acting weird.
yeah, it's very good. Yeah, it's great. Actually, when I taught it, certain details.
Can you check on naturally low, see if it's streaming?
Yeah, limit.
So,
Why is it not letting me in?
hey Darlene.
You able to hear me?
Yep.
Okay.
Do you recognize anyone?
Happy to be back, probably, right?
I am glad to be back.
Oh, I'm glad she's back.
The first couple of drop-offs are never fun, but
You don't need, okay.
we got through that last week.
If you saw activity in their house, you know that she's happy to be back.
We're outnumbered now.
Zone defense. It's Ulster. It's a game changer. You gotta go from man to man to zone defense.
Yeah, I thought
School.
Service.
Is that working now?
The school is doing something.
Oh, are they? Figured it out.
That's supposed to be more of a, like a tab versus a computer. This is 11 inches.
What's that?
Nothing like last minute.
No. Various, they couldn't decide.
Yeah, we got two different things yesterday about where they drop off Colin, and they had two different entrances.
Yeah, we're trying to figure out if they can do any of the transportation because he's there, but yeah, interesting times.
So we're still not sure where to drop them. I'm just gonna throw them out the window on the way back.
And this, that's where you're at.
Major problem. We got two grandkids from Rochester this week. So.
Oh, yeah.
Brittany, I thought of a potential executive session topic.
Yeah.
Those discussions regarding the Bucky release.
Okay.
Because of potential for litigation.
Okay.
So, Goggin was unavailable, Darlene's on Zoom, and
That
Jerry,
counts as quorum, so.
and we're expecting Jerry at some point. So I guess we can get started. Call the meeting to order, and on Jerry's suggestion of to begin our meetings, we thought we'd try something different, trying to get everybody on the same page. And so gonna read our current mission statement. Our mission is to attract and enhance industrial and economic development, help create jobs, and maintain economic stability within Lewis County. We will work to promote and enhance economic conditions, recreational opportunities, prevent unemployment and economic deterioration, and ensure the prosperity of our businesses, industries, communities, and citizens, leading to an overall better quality of life.
All right, good morning, everyone. I apologize, we sent out the executive director report late. It missed the packet, so you did receive it yesterday afternoon. But a few things to highlight, things that we've been working on over the past month. First of all, welcome back, Cheyenne. She's almost back to normal hours, so very happy to have her back.
The hours part.
We met with Christy in regard to our Naturally Lewis strategic planning, and we decided to add in a couple of more sessions just because of the pause in our planning process and kind of the needs that have arisen because of the COVID-19 pandemic. One of the sessions that we added in was an economic development partner session because of the aspirational statement that we've been creating through our process. It really talks about all of our partner entities and what they do. So we really wanted to bring those partners together to talk about our strategic plan and how we can collaborate and just work together more to get projects done. So that included planning, Parks and Rec, Extension, the workplace, the county, I think that was it, Chamber. It was a really great session and it kind of pumped us up to get the strategic plan completed and to work together more in the future. And just some Naturally Lewis marketing updates. In the spring, you guys approved funding towards the mynny.biz website hub through Coughlin. We do have our first website live. Denmark Apple Orchards took advantage of that. We have been working out some glitches, so we will send you that sample website by the end of the week. And we are continuing to sign on new clients with that platform. So that's really exciting. Jen and I have been working on, in relation to our Reboot LC brand that we launched during the COVID pandemic back in March, April. We're working on a Reboot, Reset, Refresh event series, which includes industry-specific roundtables, educational seminars, webinars, just an array of information that businesses might need during this time, as well as just some networking and collaborating and coming up with ideas of how the county as a whole can work together. And lastly, back in 2019, we contracted with Eric Adsit to do a Naturally Lewis promotional video on living, working, building business in Lewis County. Jenna was able to facilitate that. All of those interviews, we were able to interview, I think, 6 or 7 different people that live in Lewis County, are working in Lewis County, have a business that range from agriculture to healthcare to small business owners to people that just live here, might work remotely. So he's working on that video, and now is like the perfect time to promote living in Lewis County. So hopefully by October, he will have that ready for us. Any other questions? That's all I got.
All right. Correspondence.
As we will discuss, we held our public hearing for the Omni Navitas Solar Project, East Road Project. We didn't get anyone in person at the public hearing, but because of COVID, we're able to accept written comments. So we did receive a letter from a neighboring landowner, a neighboring resident, in regard to just some questions that they had about the project. So Omni was able to respond to that letter, and we did include that in the board packet, and we will review those comments.
Next, we have was Bush and Bauer with the audit review.
Thank you. So I'm here to present the draft audited financial statements today. I'm going to pull this down a little bit because I'm afraid you're not going to be able to hear me. So I'm Liz Bush from Bowers and Company. I have Andrew Smith on the meeting as well. He managed the audit, and here today just to present the audited financial statements. We just met with the audit committee earlier at 7:30. So we went through a more detailed review of the financial statements. So I'll make this a little bit more condensed. So if you turn to page 2 of the draft financial statements that I provided you, you'll see the opinions at the top of the page. So we issued an unmodified or clean opinion on the financial statements. And it means that your financial statements are prepared in accordance with generally accepted accounting principles. So it's always good to have a clean opinion. Pages 3 through 10 are the management's discussion and analysis. This is a required part of the financial statements. It's we provide the condensed schedules, and then management prepares the operation highlights and economic outlook and future developments over on page 9. So I encourage you to read it because it has quite a bit of information on all of your projects in progress and future items. So on page 11, we have the statements of net position. This is your balance sheet. On the balance sheet, we did add a section on restricted assets. What we did was we broke that down a little bit more clearly than we've had in the previous years. So you have current assets, restricted and non-current. Your restricted assets consist of cash and some loans receivable that are from grant funds. Excuse me. Here you go. We just started on page 11. So for the year ended May 31, 2020, you had total assets of just a little over $3 million. That's a 27% increase, or $650,000 from the previous year. Most of that's in your current assets. Your current assets at the end of the year were over $2 million, with cash being $1.5 million. Most of that's attributed to the sale of this building. And then down below, under non-current assets, we did see a sizable decrease in capital assets, which would make sense. Sale of the building, increase in the cash. Under total liabilities, we have total liabilities of about $258,000 this year. Most of that increase from the prior year of $61,000 is due to the amount on the line of credit. There was $246,000 outstanding at the end of the year. That line of credit with Community Bank is specifically for the Lions Falls demolition project. So once that money is received, we have a grants receivable up above for a corresponding amount. Once that money is received, that line of credit can be paid. So then it leaves you with a difference between your assets and liabilities of a net position of about $2.7 million compared to $2.3 million in the previous year. About a 20% increase, or over $400,000. So it's a nice, sizable increase in your net position. Most of your net position is unrestricted. It's about $2.2 million compared to $1.1 million in the previous year. Over on page 12, statement of revenues and expenses and changes in that net position. We have total operating revenues of over $700,000 this year. It's compared to about $370,000 in the previous year. Very sizable increase. A couple items to note with that. You had contract revenue of $180,000 from the Lewis County this year for economic development, and then an operating grant revenue of about $252,000. And that's from the New York State Empire Development Corporation, and that's for the Lions Falls project. Down below, your operating expenses stayed very consistent with the previous year. You had $576,000 in operating expenses compared to $536,000. Most of that is due to the building occupancy expense was down this year. It was $46,000. Compared to $200,000 last year. And that was basically, maintenance and routine type expenses related to this building. So with the sale of that, that would be down. However, that was offset with an increase to economic development expense of about $269,000. Most of that for the Lions Falls project. And then moving down towards the bottom of the page, we do have capital contributions of $170,000. What that is, it's the Lionsdale property. That's two parcels. One is the commercial piece of $150,000, and there was a smaller parcel for $20,000, which was subsequently sold. So you have a change in your net position of an increase of $455,000 this year compared to $4,800 last year. I won't go into detail on this next statement. It's a required statement, the statement of cash flows, pages 13 and 14. What I can say is that we look to provide more information on this statement. We're only required to say cash received, cash payments under the operating activities from, cash received from customers and cash payments for salaries and supplies, but we thought it'd be more helpful if we broke out the information into more detail of those different line items. So we did that. And then down below under capital activities, you had two large transactions this year. You had a sale of capital assets. What that consisted of was the HDK building, this building, and that small parcel. And then you had a purchase of $350,000 for the HDK building. It came in and it was sold for the same amount. So those are all the items that increased your net cash by 1.1 million. Page 15, we have the notes to the financial statements. And your notes, they're about 15 so pages. Nothing really significant changes in your note 2. However, we did expand on a couple of the notes just to provide more detail. The loans receivable on page 17, the loan review committee did institute a system in place to monitor your loans receivable because you have a sizable loans receivable balance. So they have a loan rating classification of satisfactory, watch, or substandard. So each of those loans can be individually assessed and then assign a percentage for an allowance for a doubtful account. So a lot of work went into that. I sat in on one of the more recent meetings, and it was good to have a system in place for this. Over on page 19, I just want to point out in note 3 that all of your cash is either collateralized or insured by the FDIC. And then over on page 21, we start a lengthy note to loans receivable. This includes all the loans receivable. This would include installment lease agreements for your equipment, the hand-in-hand building, the Black Moose property, and then of course, all of your loans for your micro enterprise and your USDA rural business enterprise loans. So again, this year, we continue to present all the detail of each loan because you have about 7 loans right now, 7 or 8 loans. So that extends from pages 22 to 24. And then page 24, we have your total loans receivable, which is $578,000 this year. We have an allowance for loan loss or doubtful accounts of about $30,000. And then your current portion, what's expected to be collected in 2021 is about $59,000. We do provide a breakdown of what these loans receivable are funded by restricted assets. Restricted assets would be the micro enterprise loan and the USDA rural business enterprise loan. And then your non-current assets would be your other loans receivable of about $406,000. So your net loans receivable is about $488,000 altogether once you take into account your allowance and your current portion. Pages 25 and 26, this is where we added the new information that was provided by the loan review committee. So they come up with this process, how to analyze the loans. At the bottom of page 25, most of your loans are in the satisfactory category. There is 2 that are in the watch category because they're a little bit behind. And then over on page 26, you can see that most of your loans receivable are current. There are a couple of loans that are greater than 90 days. And then we show the activity and the allowance for loan loss. Over on page 27, we do have a note on the restricted net position, note 9. And what this consists of your cash in those restricted accounts for micro enterprise, USDA, and economic accounts, development funds. Page 28, we have information on your various contract and grant revenues. Note 10 is the contract revenue with the county. That's $180,000 to be used for economic development projects. Note 11 is operating grant revenue. This is more detail on the loans that on the grant from the New York State Empire Development Corporation. This is for the Lions Falls project. And then other grant revenue are the grant revenue streams that come in for the micro enterprise loan and the rural business enterprise grant loans. And then over on page 29, we finish with some other notes. Note 15, the Wood Products Industrial Park. That lien, that mortgage was released last year on June 18th, and that property was purchased by the IDA and sold for $350,000. And consistent with presentations with other for-profit, not-for-profit, and governmental entities like yourself, we include a subsequent event note because, with the COVID-19 outbreak, we don't really know, what to expect for if it would negatively affect your operating results or financial conditions. So the AICPA, which is the governing body that we follow to prepare financial statements, suggests that we just put a brief, very generic note in all financial statements about COVID-19. And then the last report in the financial statements, this is your yellow book report. It's required by New York State Authority Budget Office. So what it is, it's the independent auditor's report on internal control over financial reporting and non-compliance in accordance with government auditing standards. So with this report, we do have one significant deficiency to report. It's on page 22. You've seen this in the past. It's on the preparation of financial statements. So when management,
page 32 or 22.
32, sorry about that. I know I'm trying to talk clearly through I'm gonna have to get used to that. So page 32, what it is, it's the preparation of financial statements. This has been in here for quite a while. And it's very consistent with other organizations your size. So management is not able to prepare their own financial statements. They rely on the auditor to provide all the necessary information to have clean, unmodified financial statements. So it's it's a common practice, but you may since you don't have anyone with that expertise, you may you're open to you may not be able to detect or correct potential misstatements. So what we have to report is that it's considered an internal control deficiency. However, the response that's, that the cost of contracting with another accounting firm to prepare these before we go into audit or hiring somebody to prepare your financial statements internally, it's just really cost prohibitive. We just see this significant deficiency throughout many organizations this size, so and it's been continuing through. And the last report on here is the investment report. A couple of years ago, the Authority Budget Office contacted us, and I'm sure other auditors, and wanted us to put a report in here that just states that you don't have investments. And if you did have investments, if there was internal controls in place to monitor those investments. So we do have this report in here to be in compliance. And then the last item, if you had bound financial statements, you would have a letter in here that would just be loose leaf letter. This is a management letter. It does not get bound in with the financial statements, and it's just some management comment and recommendation. We know that during the internal control processes here that bank reconciliations are being approved by management, but we don't see it initialed on the actual bank reconciliation. So we're just recommending that just indicate the approval of them when they're done each month, so we can document that. And then the last item is a communication letter. And this is a letter that we communicate to you. It's about 4 pages long. Whether or not there were any disagreements or difficulties with management with the audit, we're happy to report there were none. And then also we have to include any significant journal entries. Maybe we made 2 significant journal entries, one for fixed assets, reallocation, and to record a grant receivable. And then there were some minor journal entries that I provided to management. So, overall, very clean audit, very cooperative. At that point in time, a couple months ago, we had to do everything remotely. So it went very well. Everything was uploaded as we needed things. We'd contact management, have them provide it to us. And, it went very smooth, very cooperative. I sat in on the loan review committee meeting, and the pre-audit committee meeting, and everything was, ran very smoothly. So, Andrew, do you have anything to add?
No, other than it was just a pleasure meeting Cheyenne and Brittany and being able to work with them as well as we did. So very good.
Okay, thank you. Any questions? Okay, thank you, everyone.
Thank you.
Thank you.
Thank you, Leslie.
You're welcome. And I will have final, so they're final, good to go. We just, sorry, I gotta talk louder. We'll just have our administrative staff next week, just take the draft off, put them on letterhead on the good paper and bind them then. So, okay, thank you, everyone.
Yeah.
And they're due, September 30th to Harris.
Yeah.
Thanks.
And we'll have the PDF copy too, right?
Correct. Once you have the final, we'll have the PDF.
I guess I do have a question.
Oh, sure, sorry.
In thinking about the significant deficiency,
Mhm.
it would seem to me that as part of our public meeting, we ought to have a discussion
Mhm.
and validate or express support for the response. I would think. I guess it's kind of, that's my question. I can envision if we had a difficult year and this is the response, I could see certain constituencies really challenging us on not investing in additional accounting services to make sure that information is made available more timely to management.
Mhm.
So do you see that as an appropriate way for us as the board to acknowledge the deficiency, but with a thoughtful discussion?
Sure, that would be fine. So with these significant deficiencies, it's more with smaller organizations where we have to go in and prepare the financial statements and really guide management more with the generally accepted accounting principles. But we can change that response and have a different response. Someday I'd like to see that would be removed, perhaps, if, once, we get to a point where we have less journal entries to make and more, and it always helps, with the board involvement, the board being more involved. What it is, it's kind of a gray area. I know that there's more reliance on us to make sure that the financial statements, now if this was a big city or a county, you probably have someone on staff that could actually prepare those financial statements with all. But yes, we can change the response or have a different format.
The response is fine when it's a clean audit.
Mhm.
And that there was good financial performance. I think the response could be subject to criticism if we didn't have a strong year, or we hit a period of, which happens sometimes, of 2 or 3 years that are not strong.
Mhm.
So that may be worthy of the board just sort of kicking that around a little bit to see how we handle that show. It's always great when things are good. Right?
Yes.
Part of what we have to think about is what if it wasn't so good, and the scrutiny that could come our way because we didn't have the ability to see it sooner.
Yeah, and just thinking back over the years, we have, and I don't know at what point or where we would get to that internally, but the bringing Cheyenne on board has created a situation where we were better able to be prepared than previously, so.
So is that part of how
Well,
we're thinking about responding?
Yeah, it wasn't, it hasn't gotten to the point where it took away that deficiency, but I would say compared to 4 or 5 years ago, the way we interact has changed quite a bit. Would you agree with that, Liz?
Yes, Cheyenne is very strong in her role and, and as a finance director. But again, these statements the governmental type statements are easy to prepare. There's a lot involved, and I could think of one of my larger governmental type clients. I have a CPA as a comptroller, and he's preparing everything, and he does all the GASB, the Governmental Accounting Standards Board's continuing education, and he actually prepares them, so we know he understands them. And but I think we could get to that point to remove that at some point. I mean, it might be, a year or two, but I think we're heading in that right direction. We're definitely heading in that direction, as compared to 3 or 4 years ago, 5 years ago. So
So I just wonder if acknowledging that we're working towards that.
and we can change anything, and these are still in draft mode. We can change any response if you'd like.
Right, so we could talk about that perhaps.
Okay.
And under the bank reconciliation comment, and is that just simply someone putting an initial and a date on a bank statement? Is
Yes.
that what you're telling us?
Yes.
So that can be addressed.
Yes, that's an easy fix.
Very easily. That's why it's here as a separate letter as opposed to being, so when you have your bound financial statements, these will be all bound as considered. And this is more of just a management letter, just a comment letter of more insignificant. I don't want to make it sound like it's not important. It's very important. So if somebody's reviewing something, it's always good to initial, just to make, so that we can see that. So, yeah.
Okay, thank you.
You're welcome.
Anything else for Liz? Thank you for that, Jerry, and thank you, Liz, for
Okay,
the
thank you.
discussion.
Thank you, Liz.
Okay, thanks, everyone.
Thank you, Andrew.
You're welcome. Thank you.
All right, so the next thing on our agenda was just an update on the last governance committee meeting. So we will be talking about our draft Utep in more detail later on in the agenda, but if Jerry's ready, we could have a little update on that.
So yes, the governance committee met twice in the last 2 weeks, probably for a combined time of maybe 2 hours and 45 minutes between the 2 meetings. Both meetings were well attended. As appropriate, the committee got into some weeds to truly understand the Utep. We did, as the minutes will reflect, spend time on other areas, but the Utep was really the driving topic. And then as part of that, or related, there was a fair amount of conversation on the solar policy. So I think, what we need to do is jump into the Utep, and we have recommended approval by this board. And then there's a calendar of events that has to occur. So I don't know,
Now that
does that capture the essence? I mean, we really focused the policy and Utep. Thought it was robust conversation. Everyone was very engaged. Between Kevin, Joe, and Brittany, I felt the extra work they did outside was very informative to those of us who are not expert on things like Utep and solar policies. Felt like we learned a lot.
Thank you. So we'll move through the agenda as as it's listed and start, so now that we've had the updates and our guests will go into the item for approval. So Jenna sent out the minutes from the August meeting in our packet last week. And did everyone have a chance to review those? Any questions? What do we have? Motion to approve. We have a motion. Jerry, a second. Any discussion? All in favor?
Aye.
Motion carries. All right, July financial reports are also included in that document.
We're gonna have Shar just jump right back in and we took Jerry's suggestion and highlighted the specific rows that we want to focus on.
Which one was first in the packet?
Professionals.
We didn't have a finance committee meeting this month, so there wasn't a lot changing in the month of July. You see investment income highlighted. That was over budget in July by about 3,800. That's skewed in Snow Ridge catching up on payments, which was great. And just kind of a follow-up, I'm not sure, I've been out, so I haven't been in on the meetings, but Snow Ridge and Skewed are completely up to date on their payments right now. Basically everybody is current, which is awesome. It hasn't happened in a long time. And then you'll see occupancy is highlighted as well. That was just because we had 2 locations, expenses happening at once. But really, we're tracking really well to budget in terms of expenditures this year. Hope to continue to do that. Any questions on the profit and loss? I'm probably talking way too quiet for the microphone. I'm sorry, Darlene.
No, I'm actually able to hear you well.
Okay, great.
Thank you.
Balance sheet. You see the checking savings are basically our cash accounts, and our accounts receivable had almost, well, close to identical changes. We brought in about $190,000 in cash, that being the $135,000 grant for the business park, then became this building that finally hit via wire transfer in July. So that came in. We also had a $54,000 pilot fee come in from US Light Energy. What remains hanging out in accounts receivable is the NRG lease that we're still pursuing, and the number 3 wind invoice, which I expect to see an adjustment in our financials for that. I haven't had a chance to look at what Liz did there, but that'll be delayed until they decide to go forward with the pilot. Any questions there? And then you also have the list of transactions. Usually we only provide that to the finance committee, but because we didn't have a meeting this month, I provided it in this packet. And really nothing terribly notable there either. Standard business. Questions, comments?
Okay, thank you. So there's no questions. We look for a motion to approve the July financial. Second. Jerry, any discussion? Okay, so welcome back.
Thank you.
Thank you. All in favor? Aye.
Aye.
Motion carries. Thank you. So the draft audit is the next item.
Yep, so we need to officially approve the audit that Liz presented so that we can submit it to the ABO by the end of September. We did get an extension in our submission. So typically this meeting would have happened, the audit committee meeting and Liz coming in would have happened in August, but we did get an extension because of the pandemic. So in relation to Jerry's comments, I don't know if we want to suggest making any changes to some of those responses that Bowers gave us.
I think if we bring it forward as a motion, then we can jump into discussion, and that would be what we could do. And
So,
My comment on it is that I've been through a million of these audits in other organizations, and as long as the letter that's in the actual bound copy is a clean audit, I think that's the duty to me. You know. So,
all right, so we would need a motion to approve this, as, approve the 2019-2020 financial audit prepared by Bowers. Do we have a second?
I'll second.
Okay, now discussion.
So I would like to go back to the significant deficiency. So this is one of those times where the words significant deficiency, on the one hand, almost it's an overstatement when you listen to the auditor, right? There's a certain amount of, well, this is how we have to do it kind of thing. And I get that, right? Because I've been around audits for quite a long time. And I am sensitive to, I think, this notion of others who may have opinions about the IDA, and we open a door that truly doesn't need to be open just because of those two words. The response is a good response, but it's really a boilerplate response. So I think we could add to that response, and based on the conversation that ensued before the auditor left, we could talk about the role played with Shai's position and how the financial structure has evolved over the last 2 years. Is that about right? And we ought to work that into this, you know, so we should have that, notwithstanding the addition, her addition to the team, how her job supports information coming to the management team, the finance committee, and the board. And it is recognized there's still some additional steps that the organization is evaluating, something to that effect. So I think it's a more robust response. So that's, I would put that up. Claim audit is the ultimate goal. Tom is right on. But our meetings are streamed, our minutes are public. And I had an experience this week where an individual went back in time and looked at minutes, and then had a reflection about those minutes. So we need to never lose sight that we are a public entity, I guess a quasi-public entity, that our minutes are out there for every time. So we just need to be mindful of them.
I think it'd be very good to have this comment and discussion in our meeting minutes.
And not.
And this is the first year we've really line items for professional development as well. And so that could easily be worked in. That, I mean, I'm more than happy to continue developing and preparation of financials.
So if, would it make sense then, Brittany, if you could take the flavor of this discussion to the auditor and work into the response, notwithstanding all these other things that the management team has done to address this. And then having said all of that, question, is it a significant deficiency?
Is it significant if we are working towards?
And we've actually accomplished some steps.
Right. Yep.
And maybe this isn't part of the comment, but it's been a bit of a chasing, I don't know how to put it, but our transactions have significantly increased over the last couple of years as well. So we brought on more expertise at the same time that the level of activity was going up. So our audit has become much more involved as well compared to a few years ago because our activity level is so much higher. So it's kind of a cat and mouse thing of.
Jerry, following up on the response, so would that be basically a response to the management letter? Is basically to keep the travel with it kind of thing?
Well, there's actually a response right in built into.
Oh, I didn't see that.
On page 32, it actually lays out the reasons, the cause, the effect, the recommendations, and our response to it.
But if what they do is respond something to the travel with it, so the two documents, so there's the deficiency and then there's a response.
Right.
Okay.
All right, so with that discussion, we would ask that Brittany works with the auditor to modify the response to that. And with that, do we have a motion to, or sorry, we already have a motion to it. All in favor?
Aye.
Motion carries. Thank you. All right, it was recommended by Kevin to hold the Buckingham lease agreement.
So I want to just to clarify, this is a topic that could potentially be discussed in executive session. It's just a high potential for litigation. I don't know whether you want to go into executive session or not, but I think my job established was basically let you know that this is a potential. It could go, we could stay public with it or not if you want to, but just want to figure out that this is a certain potential for executive session.
Thoughts on that?
Well, I think, one of the reasons Kevin is here is to give us guidance on such matters, and if something is at risk for litigation, that we need to stand before executive session. We recommend a motion to move into executive session for that discussion.
Sorry, so I guess, and that's the only item at this point, right?
Correct, yes.
Okay, so we can either do that now or hold it for the end. We can do it now and mute the microphone, Brittany.
Yeah, the only issue is that Darlene won't be able to hear executive session
Oh, okay.
through technology
Right.
and how we have it set up with the live stream.
Can she call?
Yeah, I was gonna say, can
Yeah,
you just
she
put her on
can call in,
speakerphone?
Darlene, I'll call your cell phone.
Sure. Yes, thanks.
Okay.
All right, so we have a motion by Jerry and a second by Tom to go into executive session. All in favor? All right, we're now in All right, so
Now you want my motion?
yeah, we're unmuted, we're back in the public meeting, and, we would look for a motion to,
Someone.
sorry, Kevin, can you state it?
To ratify the sending the notice of early termination.
So Tom made a motion to ratify the sending of the letter of early termination. Do we have a second? Ron, any discussion?
Does the new lease include, share space for like,
Well, yeah, let's get to that in
Well,
a minute.
we're getting into that.
Yeah, well, that'll be our next one. Okay. So we have a motion and a second on the ratification of the sending of that notice. Any discussion? Okay, all in favor? Motion
Aye.
carried. All right, our next item is the a new lease agreement. So we were fortunate to be able to find a move-in ready space that would accommodate us. And Brittany, do you wanna?
Yep, so that was another document that I sent yesterday afternoon. We were able to clarify some of the lease terms and put actual numbers in this lease. So it is a 1-year lease, $700 per month. We get the first floor of the building, and it will include both us and the chamber. There's enough space for the 5 of us to locate in there.
There is not space for our other co-working tenants
At this time,
at this time.
there's not that co-working flex space. However, the 2nd and 3rd floors are completely gutted and have a lot of potential to become that space. But my thought is, so let's just get in, let's do a 1-year lease. We do have first option to buy. And at any time, if we say to the owners of the building, who are also contractors, hey, let's continue to lease and renovate the 2nd floor, or hey, let's buy the building from you and renovate the 2nd and 3rd floors. We can go back to them at any time to renegotiate and talk about future plans. But at this point, it's a 1-year lease, $700 a month, us in the chamber, we get first option to purchase.
is there room for a meeting like this?
So all of our board meetings will now be held at the JCC Ed Center because there is not enough room. There's enough room for maybe a committee meeting with 3 or 4 people.
Is it the intent at some point, if this goes forward, that there will be room, if they,
Yeah, I would think so. I think that's something that the board has to talk about again. And we can bring you guys down there when we start to move in and show you the 2nd and 3rd floors. It's a really cool, unique old building. Nothing like the old, the other old building that we were previously renting, but a lot of potential.
This came up in governance, but may be helpful for everyone to hear. Why didn't we consider this building?
It was currently occupied for the past year. And because of the COVID pandemic, the tenant that was in there decided to get out of her lease September 1.
Which building is it, linking Lewis buildings?
No,
It's right in between Kathy's Barber Shop and the National Abstract Building. It used to be like an old clothing store.
Oh, Cohen's? Is that
Yeah,
what it is?
yeah.
Cohen?
Yeah.
So again, the lease was shared yesterday. It's been reviewed, and it is a move-in ready space that will allow us to be out of here by our deadline.
Mhm.
So, and then with some flexibility for future expansion if we choose to stay there. So, any questions? Could we take a motion to approve the new lease agreement? A second?
I have a question.
Okay, so we got a motion and a second, and now we're into discussion.
We had this comment last meeting about the difference in the rental thing here. Is that worth, for some of the reasons Jerry kind of pointed out earlier in the previous discussion, to make that part of this, that we're saving money here by moving from one village, or is that a moot point? I don't know, just mentioning
I mean, it's definitely a significant savings and we're essentially splitting it with the chamber too.
And it is a smaller space, but we are, I mean, it is a prudent move in terms of, because we're kind of in transition.
And being back downtown will be very beneficial.
So, so I agree, I think, thank you. I do think bringing those things forward, because at the committee level, we vetted this out, and all of that detail came out, so that is a meaningful detail.
Thank you, Ron. All right, any other discussion? All in favor? Motion.
Aye.
All right, now, on to, probably one of our more significant items, which is the draft Utep. And so the step today would be, approving the draft to be sent out to the taxing jurisdictions for their review. So this is not a final approval, it's a step in the process, to send it for review.
Yeah. So we provided you with the entire universal tax exemption policy draft that includes the commercial solar insert that we've been working on for the past couple of months. But I want to turn your attention to the edited version of the solar amendment so that we can focus on that a little bit more. So I prepared a couple of screens or slides here. No, why are you not working? Oh, there we go. Okay, so I want to go back and reiterate the reason why we're going about this countywide solar process, why we're revising our Utep to include solar language. We're doing it to preserve the agricultural industry, preserve the prime soils and actively farmed land, so that we can really take a look at the economics of solar use versus agricultural use for the Lewis County economy and the individual landowner. We're doing this because we want to have the same process for each solar project that's coming through the county. We're doing this so that all county entities are on the same page when it comes to these solar projects. And again, going back to the two-pronged approach of the planning side of it, planning and land use, and then also the IDA tax exemption policy side of it. And then making sure that we're undertaking planned and thoughtful development. So we have worked, as Jerry stated, the past 2 governance meetings on the specific details for the solar language. Just to recap where we've come over the past couple of months. We're incentivizing the use of marginal land versus prime, actively farmed agricultural lands. That is the reason why we are doing this. The starting pilot amount for all projects would be $5,500 for prime and actively farmed lands. And the discount considerations to go with that would be whether or not the land is actively farmed or not. And we determined that actively farmed means within the past 18 months.
Essentially supporting a commercial agricultural operation in the last 18 months.
Yep. Whether or not it's prime if drained, or important farmland, as according to USDA definitions, which are included in our Utep, and other community contributions. So any sort of contribution to the Community Economic Development Fund, for example. Each project will be taken on a case-by-case basis because each situation is different. And so essentially the pilot range would be $5,500 to $4,125. That doesn't include any discount for a community contribution. So that's just really looking at whether or not the land is actively farmed and looking at the soils. So some unfinished business that we need to talk about today. We need to figure out, so if we look in our solar, the solar amendment in section C focuses on the soils. We've determined that we want to look at prime if drain, and important farmlands when looking at soils. And we need to determine whether or not we want that discount to be a 10% discount or a 15% discount. Joe and I kind of tossed around the idea of 15%, just because we're considering 3 types of soils. So we can discuss that. And then another action that we needed to take was to get some of that soil information from Lewis County Soil and Water. So up here on the screen, we have some information based off of township. And this information is only for that prime land. So like the top prime agricultural land in Lewis County. I circled some of the townships that are higher up on how much prime land is actually within that township. So, you know, Leiden, Lowville, the town of Lowville, Martinsburg, Turin, West Turin, they're pretty high up for the percentage of prime lands within their town. Michelle is working on getting the prime if drained and important farmlands category added onto this chart.
Yeah, so sorry, Whitney, if this is repetitive, but just, so what this looks at is these are GIS layers that are available from the USDA and the county. So total acreage is obviously the acreage within the township. The tillable acres are the acres reported to USDA by commercial agricultural operations in the county as being land that is actively worked and farmed. This doesn't include forested land or, you know, some farms own significant forest lots and other, this is their tillable acreage that they report to USDA. And then the next column is fairly self-explanatory. It's of those tillable acres reported to USDA, it's the acreage that is defined by USDA as prime soil types for agriculture. And then the percentage is the percentage of the tillable acres that are prime, that are also prime.
So that last number is the percentage of the prime land and not a percentage of the total acre.
Correct. So essentially in the town of Krogan, there's 8,328 acres reported as being but to USDA, and of those 1,576 are prime soils. So the balance of the approximately 80% of other land that is tillable are not defined as prime soils by USDA. They're still agricultural soils, but they're not prime. And that's, yeah, and so then this brings up, here's an example. Michelle from Soil and Water was working with us. So this has all 3 categories USDA defines of prime farmland if drained, and farmland of statewide importance. And these all have USDA definitions. And ironically, farmland of statewide importance is actually the lowest category, because basically what that says is that it's not prime even if it's drained, but it's a soil type that is important in that state for agriculture. So they're kind of out of order on here, and technically it'd be prime and then prime is drained and then farmland of statewide importance. But you can see Krogan is a very large township with a lot of forested land, but you can see here the tillable acres that are in the township, how that breaks down
So the exemption, the 10% as it's listed here, exemption would be applicable to tillable or used land plus or prime land.
right. So there's 2, we came up with 2 criteria. with the idea of, the thing we want to protect the most, which would have the highest pilot, the starting point would be if it's prime land and being actively used to support a commercial farm, then we want to protect that the most. So it's a mechanism to put a higher rate on the use of that land for development. So that it doesn't make it illegal. It's not a zoning issue. It doesn't make it illegal to use that land. The landowner still has the right to use it and work with a developer, but they are gonna pay accordingly for the value of that land. And then if they can show it hasn't been actively farmed, and say it's a retiree that isn't farming it anymore and it's been sitting idle, then there would be a discount off of that pilot rate. That's the first thing. And then second, independent of whether it's being actively farmed or not, we would look at the 3 categories that USDA defines for soil types and use those 3 categories to better to apply a second reduction in the pilot amount to incentivize the use of the more marginal land.
So they could get 20% if it's not actively farmed and is also prime land.
Not prime land.
Not prime, not farmland, I'm saying what important is not.
They could get up, our starting point is 5,500 and they could, as it's written now, they could get up to 20% off of that if it's marginal land and it's not being actively farmed.
Okay.
Now, one of the discussion points is that do we want to make that total 20% or 25%? And because again, we want this to have enough teeth that it makes people think about the use of that prime land. And because we're implementing there's 3 different soil type criteria, the discussion was to move that rate to 15% instead of 10. So leave the discount for actively farmed land at 10%. But then the question is, do we go from 10 or do we go up to 15 for that second category, because it could essentially be done in stages based on the 3 different soil categories.
In that pilot range, that's considering if it were 15% discount for the.
So if you do the math on that 4125 of being our low end, that would be a 25% discount off of the 5,500. So
I'm very sorry I didn't make it to the Utep meeting, but I had a conflict. But I'm about as involved in this stuff as you can get. I've been working with 2 or 3 different energy companies doing this sort of thing. And I'm 100% on board with what you're trying to do with that. But I just want to let you know that the pilot is about the last thing that happens. The state and the National Grid has got a deal where they do things that the energy companies come out and basically their closeness to a substation is what really makes this work or not. And so you've got an energy company that's found a spot that's close to a substation, then they send somebody like me out to talk to the landowner, and if you can talk them into some sort of a deal between the energy company and the landowner, then that's when you get to this. So there's a lot of things that happen between or before this ever happens, but when you actually get to, I mean, a lot of the landowners that I've talked to, you can have that punky field over there, but not my goods. So the landowners actually are thinking about this.
Yeah, so I very good comments, Tom, and a couple of responses to that is one, One, right, and a third step of the process that is also involved is the township approval of the land use. And so the approach we're taking with the county is that this is what, there's those two other parts. There's the landowner part and there's the town zoning law part. And this is the third part, and this is the one we have control over, this group here. Secondly, we're working very closely with the county and the planning department to help the towns with their zoning and land use part of it. So we're trying to address that second piece in a collaboration with county planning department and county government. And then the third thing would be, I totally agree with you. Landowners are also thinking about this, but to be perfectly frank, what we've seen is that the companies like to push their weight around and say, well, yeah, I know you'd like it in the back 40 on that poor field back there, but you know what, that's a little too far from the road for us. If you want this lease agreement from us, we'd like to put it up next to the road. And so we see that happen, that back and forth between the landowner and the company. And another place where we feel this can be effective is just in that case of the landowner now has a bit of a bargaining chip to say, look, I know it's going to cost you a little bit more to put it on the back 40, but I also know if you put it back there, it's going to save you in your pilot. So take that savings from the pilot and use that to run the extra transmission line out to the main road from my back 40, because I don't want it on my best piece of land. So we also feel that this could work in the landowner's favor as they bargain with the company on where exactly on the property they would prefer to see the project placed.
The other part that we've been trying to, and I know you've brought the assessors into the discussion as you've worked through this, is trying to at least get a ballpark on how the underlying parcel assessment will change. And I'm gonna try to work on a matrix that at least tries to quantify that. It's not uniform or cohesive yet, but tries to put a number to that so that we can try to get the whole big picture. Because if our pilot is decreasing for the use of subprime farmland, but the underlying parcel goes from whatever it's assessed at for use to a commercial use, it may completely offset the reduction we're giving them, and it may not help as much as we hope to incentivize that. So just trying to look at that side too.
That's fair, but also if they used a prime parcel, they'd be paying more here and still be subject to that.
Yeah, the assessment classification will jump, just not as much as jumping from whatever.
No.
So, Shani, just for clarification, if the land is under pilot, the assessment is a moot point until the pilot goes away?
That's what we originally thought. For the overlay parcel, for the pilot, that's the case. But for the underlying parcel, that the assessors are changing the use designation of the underlying parcel from agricultural or whatever they got classified as to commercial.
The landowner is still responsible for taxes on that parcel of land. They're leasing it to the solar company, and the pilot addresses that part, but the landowner still is responsible for the underlying taxes on that parcel. And but generally what has happened is the companies agree to pay the difference from what the landowner is paying in taxes now to what the new tax rate will be because of the change in designation, in this case from agricultural to commercial. So, and that's where, and that's not our issue, that's a town issue, so it's really not our issue, other than it's something we need to be aware of, because what happens is the project goes in, the town assessor reassesses the land, sends the landowner the new assessment, and generally the lease agreement between the landowner and the company has a provision where the company agrees to pay whatever that increase in assessment is.
So not to get off on a tangent here, but how did the wind projects circumvent that assessment?
Well, I don't know how it's gonna work going forward. Maple Ridge was part of that Empire Zone thing, and it's like, it's,
That's
No,
gone.
no, what we're told is that because the tower sits on such a small footprint as opposed to the array covering acres and acres of land, it's not as much of an issue.
That doesn't change the classification of the land.
It might for that,
It's still
half acre
remains
or whatever.
agriculture, but
right.
And
These
so-
little postage stamps of every wind tower versus a 40-acre solar field, which is all 40 acres is being used.
So this assessment,
Well,
this assessment issue is
layers and
another,
layers and
it's
layers.
another piece of this puzzle that we're also working with Candy from Real Properties on and the assessors group, because there's not a standard solar assessment. And I think it needs to happen, and the state needs to, we need to rely on the state to give the assessors some guidance on how to assess those properties.
It's really, quite frankly, a free-for-all right now, because it's really up to the assessor in each township of how they go about that. So that's where some guidance at the state level to all assessors in the state on this would be the most helpful.
yeah, it's a legal question that
It is,
Yeah.
it is.
So it's something that we're not directly involved in, but it's a good awareness piece for how all the moving parts of this process.
if an agricultural exemption or reclassification is like 40% of the taxes, and it's 60% less than
Right,
if it's classified commercial.
yeah.
Yeah, they lose they lose the ag exemption as well, and if that has to be retroactive, there's,
Wow.
yeah.
And we did cut, and just for due diligence, the county planning organized a couple informational meetings for landowners last winter. And Candy, from Real Property did address this in that meeting and tried to, inform landowners of all the implications of this, including the reach back on their agriculture assessment, because there is like a 5 or 8 year reach back on that. So for the landowners that attended that meeting sponsored by the county, we did, address that issue and to make sure as they negotiate with a solar developer that they're aware of the implications of that. So, not that covered everybody, but, just we have been trying to get the information out there.
So the one thing we need to determine before we can move forward with this is the discount for the soils.
I would propose, because of the 3 different classifications, we make the maximum discount for soils 15%, but I know that's what I'll throw on the table as a starting point for the discussion.
And just so people have a number in mind, if that makes any difference, that means the maximum discount if it's subprime and not actively farmed land would be $4,125 per megawatt. Oh, you got that.
Okay, this is 15%.
That's 25, because that's 10.
4125.
4125 is a 25% discount, 10 for actively farmed and 15 for the soil type. So which is a little confusing because it's actually the draft Utep has it at 10% and we wrote that in at 15, but just to give you an idea of what the maximum range would be. We'll also acknowledge that 5,500 is a high rate that the developers do not like, but quite honestly, that's part of our purpose, right? We want to protect that land, so we want that to be a number that makes everyone think twice about developing that land.
In my mind, you would need to have this much difference in order to really affect it.
That's, good point, Tom, and that was part of the discussion is what is enough to have teeth, right?
And when we send this out and if we receive comments and feedback on this, you know, we can certainly change it because it is a draft.
Right, this is what today's discussion is what we're gonna send out to the taxing jurisdictions for review. Not to inundate you with information, but just to make sure when you look at the document, there's a totally separate, bullet point about our right to also take in other community contributions in this. So that is a potential that number, if we decided to give a further discount to the pilot because the company was making some other investment in the community, and that's defined in the draft document, that would be a case where that number could go lower than 4125 if we decide that the company deserves a further adjustment based on making significant investment in an economic development fund or in, you know, like something like broadband for the county, you know, if there's other ways that they invest in the area.
So would that preclude or include a host community fund with the town?
That would include that. The definition we worked through with Kevin was contributions made to affected jurisdictions in either development or.
So if they, what would be the push to go to a county-wide community fund versus just doing it with the local town?
The county is an affected jurisdiction.
Right.
So
So is the town.
Right, so that just it comes back to what we can consider legally, and that quite honestly will have to be a working situation for each project in terms of all those entities, just like we've done in the past with the wind towers, those entities sitting together and discussing the best option for the entire project.
Well, I think I understand what you're alluding to, but my question is, or I guess my concern is that it opens a hole for a legal challenge in that if you don't look at a local town exemption in the same light as a community-wide exemption, they're going to turn around and challenge that and say, you don't have any basis for this.
And so the way it reads, Kevin and Brittany, do you have that sentence? Can you just read that sentence?
the agency may take into account the amount of any host community benefit payments payable by the project applicant to any affected jurisdictions or in connection with the funding of the Community Economic Development Fund in determining the pilot amount payments payable by the project.
Right. So I'm saying if you allow the economic community fund discount, but disallow a local town host community fund, that's a opportunity for a legal challenge.
So we can't have any part in that Community Economic Development Fund or any separate host community agreement, but we can consider that type of agreement when negotiating a pilot.
Right,
We as the IDA cannot say
Right,
you
so
must.
that's where it's really up to the affected jurisdictions to negotiate and get it around the table early on with the company, because we just can't be part of that. But once that information can be presented to us as a consideration for the pilot amount, but we just can't be part of that discussion. That has to be between the affected jurisdictions. So it's unfortunately our hands are tied on it. So.
So to go back to your proposal, the 15%, are you saying that if it's prime land, there is no discount Primus drain 5%, land of statewide importance 10%, and other land 15%.
Yeah.
Is that the system?
Yeah,
So there's no, it's really clear then, that there's no, we don't need to get input from anybody else, it's just crystal clear.
right, because we have the USDA definitions for all of those categories that, if we look at the GIS maps, it tells us the category that that parcel is in.
Yep.
And we refer back to that.
Okay, that's fine. Okay.
And that, so, that keeps it at kind of 5%, up to, 5% per classification with a total of 15. It just gives a little more teeth to the soil type than having it at 10% and having to divide those three categories by 10 instead of by 15. So that's where that came from.
I would say maybe we're good to move forward with that.
Yeah, is there any counters or any questions or any concerns with those numbers? So we will take, the action today would be to, a motion to approve this as a draft to be sent to the, to all municipalities in the county for review. And there'll be a deadline on that review, right?
Correct, yeah.
They'll have a certain period of time to make that review.
I go ahead and make the motion.
Tom makes the motion, do we have a second?
A second.
Oh, well, we can have that as part of our discussion if you would like.
Well, I know you're looking for a second.
Well, Darlene made a
Oh, I beg your
second.
pardon, I didn't hear it.
Yeah, so, all right, so we do have a motion by Tom, a second by Darlene, so we'll open it up to the discussion.
Well, another thing that was just zipping in and out of my head is the IDA or someone gonna take it upon themselves to attend any of these town meetings to try to explain this thing to the people, because it's kind of
So,
complicated.
What we're gonna do is we're gonna put together a letter from the IDA with the draft policy. And also give board members some talking points, and I'm gonna go through the town board meeting schedule and between our staff and some board members, even just direct phone calls. I plan to call some of our legislators and sit down one-on-one with them to kind of talk about what we're doing to get their feedback. So I will have a packet essentially of stuff to send out to the taxing jurisdictions, but also talking points for all the board members as
good.
well.
Thanks.
Yep.
Any thought in holding a public meeting, and inviting, all the towns and legislators to
Cassie and I were talking about doing joint planning and IDA municipal roundtables, but because she's on maternity, those won't happen until maybe November. But I think this month is a good opportunity to just call, to talk to them one-on-one.
Are you planning a presentation on this at the committee meeting?
Yes, yeah.
Yeah, so again, this has been a very close relationship with the county in terms of the whole picture. I mean, this is our part of it, but the planning office has been very active and proactive in developing materials for townships to consider adopting in their own townships, with the hope that we can get on the same page countywide, and that Brittany and Cassandra will work to answer questions and provide, educate everyone concerned over the next few months.
So there's a motion on the table to send this proposed amendment to the Utep out to everybody. However, there is also the discussion about amending this Utep to use the 5, 10, 15. So should that be, can somebody make that as a motion to, is that what the board, sense of the board is, that they want to make that amendment? And then we can then approve that, the Utep with that amendment out to the community? I want to make sure we've got the right Utep going out to everybody. So
Thank you, Kevin.
So from a process point of view, what would be the next action? So we have a motion, would be a motion to amend.
And motion to amend the Utep that's been suggested for approval, yes, submitted for approval. So, and I wasn't sure whether it's the consensus of the board to do that or not. I think it is, but.
So why don't I bring forward a motion to amend so we can clarify that question.
All right, so Jerry made a motion to amend, from 10 to 15%, based on the 3 soil classifications.
So let me read what I've written here. So that this paragraph C will now read, in the event that the solar project is located on land other than prime farmland, the solar project shall be eligible for a reduced pilot payment. The amount of the reduction shall be 5% if the land is categorized as prime if drained. The amount of the reduction shall be 10% if the land is categorized as land of statewide importance. The amount of reduction shall be 15% if the land is not prime if drained, nor land of statewide importance. So that's it. There's no other language in there about getting input from anybody else, negotiating. It's just crystal clear. This is what it's going to do. Is that what you understand here?
I would second his amendment.
Seconds that. So now we have two motions. We'll finish the first. We'll do the amendment first.
Yep.
Right.
Any other discussion on the amendment? So
could we go back to one slide?
Yeah.
Discussion. It was the slide that was the matrix that showed active. Yeah. So I just want to clarify something. In Larry's discussion, that was helpful, Larry. So I understand total acreage. I understand tillable acres. Prime and tillable. So of that 8,300 tillable acres, 1,600 are considered prime and tillable. Meaning, are they being tilled or it's just the designation?
no, they're being as the landowner is reporting to USDA, they are being tilled.
Okay. So then what does the prime and tillable 19% represent?
It's the 1576 divided by the 8328.
Okay, so 19% of tillable acres are being tilled and they're considered prime.
Yeah.
Is that?
Yeah.
Thank you.
And so you can see there's quite a range by townships, and when we think about the geography of the county and that a lot of our agriculture is in the Black River Valley, it makes sense, right? And so that is something that we all should be thinking about as this letter goes out, is it has different implications for different townships, right? In terms of the amount of their land that falls into this category.
So circling back to education, that this would be an important slide, I think, for the board of legislators and the leaders of the townships. And maybe people who do this every day in farm would have a sense for these numbers, but I'm not, that is very fascinating information that could help influence the consensus that this is a good direction, encouraging less than prime land being part of why this is so important.
Pinckney doesn't have much.
Said
I said Pinckney doesn't have much.
So no, I appreciate that comment, Jerry, and I think, yes, this will absolutely, and thanks to the Michelle Swisher at Soil and Water, we have this data, and she's actually going to expand this out. So we'll have actually more data than this to be able to answer questions of individual townships in terms of the other two categories of soil. She had some other deadlines in her day job, so she didn't get it to us in time for this. But we will have, thanks to Soil and Water, this information to share.
And I think some of the conversation at both committee meeting and at the board meeting earlier this week, I think this will be helpful. All right. Okay, thank you, Joe.
All right, thank you everyone for that, and yeah, again,
It's been a long, involved
it
process.
has, and we're finally hopefully seeing the light at the end of the tunnel, and, you know, again, Brittany will be getting us all some more talking points, so that as we're out in the community and within our, you know, the townships we reside in, to be able to hopefully have some of those conversations and make ourselves available to our elected officials, so.
So I think the amendment got approved.
No, we never actually, so we have a motion by Jerry and a second by Tom for the amendment. All in favor? Aye. All right, so now we have the amended document, which brings us back to a motion by Tom and a second by Darlene to send this draft document to the taxing jurisdictions with a letter from Brittany, or from the IDA explaining what the process was and what's in there.
Before you take the vote, I just make one editorial comment. This is not a legal thing at all, but I just want to say this is a really unusual. I think, Brittany, you've talked to some of the people out there for an IDA to use its influence to incentivize a policy issue. This is really, really creative, and it's kind of cool that you're doing this. So that's all I wanted to say.
Thanks, Kevin.
All right, so now do we have all in favor for the sending this out?
Aye.
Thank you, everyone.
Aye.
Motion carries. All right, thank you. All right,
Now, let's make no mistake, Joe, and I'll follow. I mean, it's really been a learning curve for me personally on this. You will have to do a lot of educating before I'm comfortable talking to anyone. I mean, my experience with farming is a couple of raised beds. So I just want to be clear.
That's okay.
I just want to point out too, the idea of also has a policy generally regarding, it's not part of the Utep, generally supporting commercial solar voltaic issues. This was part of when the state of New York put out its green energy incentives. The IDA adopted this. And what I have suggested also for this is that this be amended to reflect the changes in the Utep. I think it would be consistent with your other documentations to make another motion amending your commercial solar voltaic policy to be consistent with your proposed UTEP. So, anyone want to make that motion?
This is, you sent these to us yesterday, right? Is this one? Yeah, okay. And I did have a chance to look at that, so I would be happy to bring forward that motion. I appreciate the aligning of documents in an organization.
so we had two offers here, so I think Ron actually first made the motion, so Jerry, will you second?
I will second.
All right, motion by Ron, seconded by Jerry, and based on for the amendment of our solar document to reflect our use. All in favor? Or sorry, any discussion? All in favor?
Aye.
Motion carries. Thank you. All right. Brittany, do you mind bringing the agenda back up? All right. So now that brings us to the Omni Navitas. So there was a Brittany, this brings us back to the correspondence, the written public comment that Brittany read it or referenced at the beginning of the meeting.
So just to recap, the Omni Navitas project is two 2.5 megawatt projects located on the East Road in the town of Denmark. And they started this process a few years back with the town of Denmark. So to recap on our process, and again, as Tom said, this is, coming to the IDA is the last step for these solar projects. So we received their application a few months back. We reviewed it in our finance committee. We reviewed it at our June board meeting, I believe. We passed the inducement resolution to hold the public hearing. We held the public hearing on August 20th at the Town of Denmark offices. It was Kevin and myself and Peter McCullough via Zoom. But because of COVID, we were able to receive public comment via mail or email. And we did receive a letter from a neighboring landowner, just asking some questions about the safety, the health and safety of their family, the view shed of the solar project, chemicals, are there chemicals within the solar panels that they need to be aware of? And Peter from Omni Navitas was able to answer those questions and concerns via writing, which I have provided for you. So at this point, we need to review this public comment. And then if all goes well and we're still, we still want to move forward with the project, the final step would be to pass the final resolution to enact the sales tax benefits as well as the pilot.
And Peter is on the Zoom here.
Yeah. Peter's on the Zoom.
And if there's any, yeah, again, this was sent out in advance, both the initial letter from the landowner and the response to this. If there's any questions or,
There's no need for any action from the board. You just need to be aware of that, soak that in when you're making your decision.
thank you, Kevin. So, are there any other comments related to that?
Something here.
So, so the person, the Haney's have received this response.
Yes.
Have they responded to?
They have not yet. I've sent it to them, but I have not received any response from them. If we're thinking about a public hearing, it's really, and it really should have been comment in respect to the IDA benefits. I believe that the Town of Denmark would have had to have held a public hearing in regard to the project at some point. It goes through their whole planning review board and all of their local approvals. And so some of these questions should have been addressed at the very beginning. But again, this is, you know, where that countywide solar process is going to help us to ensure that, you know, neighbors and the community and all of the parties involved are aware.
So, I mean, I guess my take is that this is a thoughtfully written letter, the letter of August 21st. And I don't know this family at all. And it's somebody who has an appreciation for renewable energy. So that's positive. I think what struck me was right at the very beginning, she was complimentary of the information that Kevin shared recently. And the comment though, this is the most information I have heard, and that on 2 occasions, people are walking her property looking for markers. These are the, you know, those are the kinds of things that can really change or influence public perception of a project. If people are walking on their property and they don't know why, and when at some point later in the process, you know, her reflection is, you know, the most information heard was from Utep, and so that was positive that, you know, that occurred. That is feedback that has to get out there, because and you want to lose trust early in the process, that will do.
Yeah.
And so that was a takeaway for me. I think our questions are thoughtful, and it seems like they've been addressed. So today, but we don't know if our questions if she has a degree of satisfaction from the questions,
I
right?
don't think I've received a response.
So,
from her.
yeah, and that's very much appreciated, Jerry, and that those first few comments did definitely stand out. And back to what Brittany said, really, it is our responsibility to consider that as we consider our piece of this, which is the pilot and the financial part. But ultimately, this goes back to when the township held their planning review process and had a public comment period for the planning review, which some of these questions really are to do with that, not to do with our part as the IDA. So I think to Brittany's point, hopefully this work by her and Cassandra with the townships will help address some of these issues raised in this letter in future projects before it even gets to us.
Right, understood.
So,
And I agree. But what we gotta be careful about is any sense of expression. I think that, oh, Denmark should have addressed that, but the question was sent to us. So we gotta be careful not to be that agency that points and create great frustration for the community. Because I think that's a criticism, frankly, state government to local government, departments within county, or towns to county, that you can really anger constituencies because everyone says, well, it's their responsibility. We just don't want to be part of it.
well, yeah, thank you. And we still need to consider this because part of our process is considering this feedback. So it's just, right, and the point is well taken, and we do still need to consider it as part of our process. It's just thinking about, less about blaming anyone in this situation and more about how we can be proactive with what Brittany and Cassandra will be working on going forward to try to learn from this and build the process to be better in the future for everyone involved. So back to Jerry's question about what are we actually looking to do today?
So today, if everyone approves with the project moving forward and the incentives that we would be providing. So again, that's the sales tax use incentive, as well as the pilot, which they have proposed 5,000 per megawatt. I have met with the town of Denmark and the county and Laval Academy School, as we do with every other renewable energy project. I think Kevin was on that call, maybe, to talk about that pilot. Everyone was in agreement with it.
So a few months ago, we had an inducement resolution, or maybe longer than that, an inducement resolution to go down this path and have the public hearing and get to this point in the process. So just to refresh, we had that a few months back, and now we're at the point where we need to vote on a final resolution to move forward with this based on the feedback.
Just one point, there's actually 2 projects, so
Right,
there's
sorry.
a resolution.
Yeah. So they're 2 separate 2.5 megawatt projects that are essentially side by side from the same company.
So we're gonna need to have two motions then?
Correct, yep. I have a resolution for the 9605 East Road project and the 9557 East Road project.
And this is a roll call vote, correct?
Correct, yep.
Any other questions?
It won't influence my decision on the 2 motions. However, could you reach out to the family who sent the letter and follow up? Are there any other questions? Because the other, and I know our part of that process, but I think a way to, from a service recovery point of view, if you will, if she has questions, to be able to help her learn where to go. You know,
Absolutely.
is it somebody in her village or town versus another agency? And I think that should serve our organization very well with that extra TLC.
Yeah, and you make a good point. Some of these larger projects, they're doing a lot of public outreach within their communities. Some of these smaller projects, we haven't seen that. I think that's a piece of the countywide process that we need to make. We need to put in there and make sure that every project, no matter what size, they're individually reaching out to those neighboring landowners to talk about it.
Thank you.
All right. With that, so we would have to, first, again, this will be two separate resolutions. The first one is 9605 East Road. Do we have a motion to?
We gotta get another motion maker around here.
I'm not looking just at you.
I'm just teasing. I'll second it.
Motion made by Tom, seconded by Ron. Any discussion? So, you know, some follow-up with the landowner and the continue, you know, thoughtfulness of this, how we improve the communication of these processes.
This is roll call, Joe?
Yeah, this is
Okay.
roll call, yeah. So I guess I'm first on the list. Joseph Lawrence, aye. Ron Burns,
Aye.
Darlene Rousum,
Aye.
Gagan Singh is absent. Jerry Pear, aye. Thomas Gillette.
Aye.
Motion carries, thank you. Now we have the second one, which is 9557 East Road. So Jerry makes a motion in a second.
I will.
Ron seconds. Any discussion? All right. Roll call, Joseph Lawrence, aye. Ron Burns,
Aye.
Darlene Rousum,
Aye.
Gagan Singh, absent. Jerry Pear, aye. Thomas Gillette.
Aye.
Motion carries, thank you.
All right, for the sake of time, it is almost 10 o'clock. I wanted to go over a recent survey that was done by the North Country Regional Economic Development Council. So we've learned about these councils through COVID-19, but essentially these councils were created for economic development reasons throughout the state. So our North Country region put out a survey to local businesses in regard to needs, immediate and long-term needs, and I just wanted to share some of those results. So the first question, what are your business's immediate needs next 6 months? And out of 80 respondents, 39% said general financing, 38% said access to or the cost of PPE and cleaning supplies, and then 23% stated workforce and new hires. So again, considering what we do and what our role is and how we can help businesses, we need to consider these results. Long-term needs, 43%, again, general financing. So how can we work to get more funding in Lewis County to help support local businesses? 37% access to technology and 30% workforce, new hires. So we're currently working on some initiatives to help fill the gap, like in regards to workforce and promoting the jobs that are available in the area. Shai and I have talked for a while now, just really focusing on financing. How can we get creative as an IDA, and just other things to consider as we go down the road. Jenna and I, we are sending out a more broad survey to the Lewis County businesses by September 15th to kind of gauge short-term and long-term needs of our businesses. Any questions on that? I just thought it was an interesting tidbit.
I would, I just comment on that. Could you go back to the finding?
Yep.
I think from an IDA perspective, I'm not sure we would have the bandwidth capacity
within this notion of general financing? Is it an opportunity for us to take a role and bring in the institutions that lend money together to talk about it? That's probably, and maybe that's what gets using this information, and how do we work that into our work plan? The other, and then with regards to the PPEs and cleaning supplies, I've heard if you are a small organization, that is a real problem because you don't have the benefit of the GPOs and establish vendor relationships in the same way a larger institution might. I think over the next 6 months, you'll see some real improvements in supply chain. So that may take care of itself. Could you go to the next slide? On the access to the technology and facilitate remote work, there's some new literature articles coming across my desk anyway, that's really questioning the pendulum swing to everyone working at home. There may be some opportunities, but you're going to begin to see that swing back because productivity, the relationships you have to build in a work or team environment to drive, strategic plans and that sort of thing. So I think that one, before we get too enthused, we really have to sort of step back and see what the data will tell us about people working at home, and is it truly, there are some opportunities, but so I just, a word of caution there. Workforce and new hires, I'll tell you, we have right now over 40 open positions, and it's been pretty consistent over the last 3 years. And I know we're not alone. And so I'll go from a healthcare organization where our folks are highly trained and we work in an incredibly competitive market to, in downtown Marlboro, there's a bottle redemption center. And so every 2 weeks, as part of my Saturday chores, this Saturday when I went, there's a sign on the door that says they've had a posting for positions since July. The school had to leave because they were off to school, and the business is shut down because he's unable to hire anyone. Now, I know just a couple of examples isn't the end all be all, but with the unemployment rate being what it is and jobs that aren't being filled impacting small little businesses and can impact large businesses. I see that as one that we may need to become a little bit more engaged. So just from the ground floor, having some access to all those issues. When I really look at it, if we can bring banking together, we could help our region. And if we could have more time and thought into workforce, because at the end of the day, you can bring business, but if people aren't working in those businesses, we are going to continue to struggle as a region.
Yeah, thanks for those comments, Jerry. And I would say, to me, that access to technology, there's two separate things there. While this does indicate facilitate remote work, which I agree is going to be a changing dynamic, I think it does also speak to our North Country region and Lewis County in terms of access to good internet and stuff.
Yes.
So we could kind of parse that out a little bit to say maybe our role isn't to facilitate remote work, and that may be changing anyways, but it does speak to the larger issue where we do have a role in terms of thinking about broadband and better general access. So.
And I know the DOH and governor executive orders have really put a lot of pressure on the hospitals to have non-clinical functions work at home to the level of a 50% reduction. So the internet access is a real driver for us to be able to say have coders and billers work from home because of that very issue.
Right.
So.
And we're working on a couple of workforce initiatives, like with the Lewis County Workplace, a central spot to post jobs, And we're really missing the boat on Fort Drum, a Fort Drum workforce, military spouse workforce. And also, I think as part of our strategy moving forward, we should be including some sort of economic inclusion strategy. Because there's a population of people that are living in Lewis County that are living in poverty, and there's jobs out there for them. So how do we connect those dots? And it's really all about collaboration. So we
I can
continue
only
to work on those.
confirm what Jerry is saying at different levels. In the retail sector, where we can't pay as much as other opportunities out there, there is no one looking for a job. There is qualified whatsoever. When you talk about poverty and everything else, there is a disconnect between available jobs and people looking for work.
Mhm.
They're
Right.
They're on disability, workers' comp, they're all working under the table.
Yeah.
The state of New York and the unemployment system and workers' comp support that.
Mhm.
As you know, and to some degree, the medical sector does also. Because it generates traffic for the doctors, and the system is partly or maybe mostly to blame for, the issue.
Yeah. Good points.
Thank you for that.
Thank you.
That was our last item as a general update.
Yeah, just want to let you guys know, we are going to start kicking off our strategic planning process in October, so we'll be sending out some doodle polls for dates. We are going to start our moving process after September 15th, which is when our lease starts. We are going to hire a moving company and split the cost with the chamber. We have a lot of stuff to move, and Ox is going to let us keep some of our larger desks here in the back corner until we find a home for them. And then the countywide solar process, I will provide you all with some talking points in the packet that we send out to jurisdictions. Any questions?
Motion to adjourn. Ron, second. Jerry, all in favor? Thank you.
Aye.
Thank you, everyone.
Thank you, Darlene.
Thank you. Thank you. Have a good day, everybody.
Old Forge.
Thank you.
Yeah.